Hello, everybody, and welcome to our viewers at investing.com. Looks like I turned on the webinar a little early. Keep that in mind, Velu. You could just edit it. Hi, Spencer. Good, Craig. And Oriano, you're very welcome. That face has helped you. Okay, so the relentless beast called NASDAQ, which I think the DSI is near 90, continues to chug along, and here we are, the 1 millionth divergence. Now, we really haven't seen a divergence, a clean one in NASDAQ, going all the way back here. So 1 hour, even though we're pushing new highs, and we know NASDAQ's leading the way because S&Ps are not at new highs yet, right? And the Dow's been lagging as well, way off the highs. So here's your leadership. Almost reminds me of a certain time period. A veteran trader of mine said he's seen bull markets end when the leadership is tech and oil together. And that's exactly what's going on. Techs and oil really being the jet fuel. I guess there are a lot of earnings out today. And I'm constantly tempted to short because I know one day that actually this could end up being a 1, 2, 3. Okay, a 3 up here. The weekly is not confirming. The daily is. So even if we get a break, I don't think this high will stand. Whereas the daily and S&Ps really are, God, been kind of diverging at a fairly high momentum rate for quite some time. And if you're just plain divergences without risk management, then you might have a position like I do in a bearish ETF that I never dreamed of would take such a hit in depreciation. And this was my only window to cover. So here we are. I don't want to be the boy who cried wolf, but tempted because of this, maybe at least for a scalp at one more new high in NASDAQ, to take a shot for a scalp to the downside, since the leader on short-term TFs are not making new highs. Okay, its Siamese twin, which looks like it could still attempt a new high, is a crude oil. The fact is, though, even though it could attempt it, and I know people are talking $70 oil, the fact is it isn't yet. And crude pretty much all the way went up with the market since January. And when you look at the weekly, and I just showed you NASDAQ, we're not quite 78.6 back, which would be $69. Okay. So on the 4 hour yesterday, we didn't really confirm here. See this? And even if we get a new high, we won't. And actually, the first time this week, we've had a couple of 1 hour non-confirmations. This was your confirmed high. Everyone see it? So confirmed highs mean or imply, which is why I call it the real simple implicator, that there'll be another high. So that was a confirmed high. We moved sideways, dipped, and the implication turned out to be reality. We made a new high, only this time we did not confirm. Okay, so one of the first divergences on a shorter time frame. I do think that now we have a new line in the sand for longs. I wouldn't want to stay long under 65.40. We've had a couple of touches there, here and here, and then arithmetically, actually, this would take it down to about 460, which is a very important area because that's where crude broke out from, right? I also have a moving average on the 4 hour, looks like the 50, coming in at the same level. So your real indication, this would be an early indication, 540, right? Your next indication would be negating the breakout here at 462. And then your huge indicator would be back inside this red line, which is coming in right around 163.75 or so. I think that if we close back in this formation, we could declare a top. But so far, not enough evidence. Still sharply higher on the week, right? There's your weekly candle, nice candle. So it's definitely fading the trend, a little bit of evidence. I'm still with it. If we're going to go up, it looks like 67 would be next. As you can see, just off this wedge line, over 67 actually. But who knows? By Friday, we could be taking out this. I may as well draw it in. You know, you always have to write things down or draw them, or you know what happens? You forget it. So this to me is an important pivot. The here, here, and here. Okay. That's going to build the bear case. And, you know, it's like a service sector is doing well too. Okay, Joshua. It is, Tom. RSI, you mean like overbought with what I'm showing? Yeah. You still need price action. It's not a timing tool. It just gives you, tells you to be cautious. And sometimes, yeah. OB, overbought. Yeah. Okay. Yeah. And oversold. It's just like the DSI, sentiment indicator. You know, you could have 10 or 85 readings for a long time. Doesn't mean just because it's there, it's a short, right? Just like anything, actually. Just because the commercials are big shorts, that too could take a long time before it manifests in the market their way. Has anyone ever experienced using COT as a tool that, you know, you want to be on the side of the commercials? They have the deepest pockets and they're usually right, and you want to be fade the small speculator and the large one. Okay, keep in mind that most commercials that show up in the CFTC COT report have deeper pockets than all of us put together here in face today. Capiche? So they could be early. And I like what Ziggy says. I don't know if Ziggy's here today, but he promotes our webinar, and he says it's okay to be wrong. It's not okay to stay wrong. I've lived it. Okay, that's Ziggy. So that's a Ziggyism, right, buddy? I have my Pinkertisms, and Zig has his Zigisms. So anyway, I'm gonna, you know, continue to stand on thin ice, trying to top pick crude. And you guys really need to check out what the team does, especially if it's the first time that you're here. You know, don't go trying to navigate the FX markets without our dashboard. Can you drive a car without a dashboard? Because that tells you how fast you're going, and, you know, if you need oil. Yeah, that's true too, Ben. Have you experienced that? You ever blow out an account, Ben? Okay, yeah, because who hasn't? Right. Okay, so this is going to help you. All right. And as you can tell, you could just do the color coding of it. And when you see a lot of agreement, because the agreements between different methodologies, you know, Grega, Andre, Blake, Steve, Stelios. So you scan through this and you can tell there's some pretty good agreement here, a lot of greens. And then we also, you know, we're not like a lot of services where they all talk one line and there can't be any disparity of opinion. Okay. So, you know, we do have we call them patterns in play that give you entry areas and where you should be getting out of the way, and they give you targets. And then if you want the explanation, you just go here, and there you go. You have the explanation technically. You also have the fundamental reasons and takeaways. And really, guys, I don't think there's a better one-stop website for trading. I think the only improvement would be if you didn't have to go to your broker's screen to do a trade. And knowing Steve Volge, one day you'll be able to trade right from this platform. So, but in the meantime, you have all these guys working for you 24/6, even 7, and you don't have to be at your workstation because of all the apps that we have, right? So we have the apps for your phone. We have an app for a tablet. You don't have to, you could go anywhere. And then we push alerts. I'm wondering if someone could push an alert right now, just a test, so that people could have an idea of when there's something happening, like a market breaking through a key level, resistance or support. You could be distracted doing something, and there's no way you're good. Yeah, I can hear you, Blake.
Yeah, just give me a minute.
Okay, there's no way you cannot hear it or know that it's there. Plus, it's going to stay on your screen. You'll see that you have a notification. Can you review what the MIC? What's that? Oh, okay. Macro is M, Pete. C is candlestick. B is basic technical. H is harmonics. And EW is Elliott wave. So we have all of those styles of looking at a market in one place. That too is very unusual. Usually it's an Elliott wave place, like Greg has his own site. It's strictly Elliott wave. Some people use harmonics, and it's a harmonic site. So you get not only different people's views and the way the market looks through their lens, you also get different types of analysis. So that's when there's confluence between not only people, but styles that are pointing towards the same outcome. The color code is green is they like it. It's bullish. Yellow is like caution, or I don't know, stay on the sidelines. And red is they're negative about it. Okay. Means it's a sell. Okay, Spencer, pretty simple. There you go. So you just see this update coming in here about Aussie Kiwi that Blake sends out. There's no way you'll miss that tone, even if you're in the other room making dinner or burning dinner, as Andre Cordoso is famous for doing.
And all you have to do is click that link right there where it says the live update, and just click on that link, and it takes you right to the analysis.
Oh, okay.
Side.
It's not up for me right now.
Oh, yeah, it is. Yeah,
where is it?
Right there on the right-hand side. It says Aussie New Zealand Basic Technical Analysis. No. You can do that, but right below your cursor. Yep, up. Nope.
Oh, I see.
There you go.
All right.
Just click that, and it takes you right over there. Did you click?
Yeah. I clicked.
Oh, it's down. It's down on the left now. You can see in the lower left.
Right here. It's already here. Okay.
Yeah. And then you just scroll up.
All right.
There you go.
So there you go. So you get the alert. I usually just go right to it. And then you get, you can look back at what they were saying. You can see how the case is built. So anyway, there's a great deal if you want to try it. It's $1. All right, for 10 days. I think after 10 days, you'll know that you need to sign up for about a decade. Okay. And I also want to mention, especially since we have investing.com with us today, if you're trading with a broker and you're not getting a rebate check. So, you either ask for it or they'll pay your introducing broker, or they'll keep it. And overseas, it can be arranged through Trent and Justin for you to pay for your subscription. And it's something you're doing anyway. And Steve enjoys the checks because really he doesn't have to subscribe. Okay. So that's a rundown in my belief. And I'm telling you guys, you guys know I've been around for a while, right? FX Street. Before that, I had, Forex stop hunters, trading rooms, and, I've been around. It's the best collection of traders and a team that I've ever been with. And that's a pretty long career. I don't want to give you the exact amount of years. Okay.
Don't want to date yourself there.
I don't want to even remember the exact amount of years, Blake. So Blake, King Dollar, Larry
Yeah,
Kudlow.
I mean this is a big breakout. So
Yes. Go ahead.
I'm gonna talk about the dollar, and specifically like the euro and I'm going to talk about the euro, and I'm going to talk about actually some of these pairs today. But let's understand what's happening here with the dollar index. The dollar index is breaking out of a multi-month consolidation, and so I went aggressively short the euro last night. I was one of my bigger sizes that I've been in all year. Actually, the only position that topped what I was in last night was my long Aussie New Zealand, from 3 weeks ago when we were down at 104 or 105, and it went up to 107 and change. That was my largest position of the year. Second largest position of the year was last night, and I was short aggressively the euro dollar, and I closed it. So I stepped in
Nice.
last night I was short. I was already short. Some from the day.
So
But
biggest conviction equals size for you.
yeah, of course, because
Okay.
as long as I can manage the risk. So I'll give you an example of what I did. So
You're a shooter, Blake. You're a
what's
shooter,
that?
buddy. You're a
Well,
shooter.
yeah, so what you just said is important. Whenever I have major conviction, that's like the in the market. That's when I'm going to be most aggressive. So I was short euro dollar all through yesterday. So my cost average was somewhere around here. Let's just say roughly. Okay. Remember, I'm on an institutional platform, guys. So I mark to market every day. So that what that means is at 5 o'clock every day, it doesn't matter where I was in the euro, my cost average resets at 5 p.m. So I could have so I have to kind of guess ultimately where my average is. But based on the way I trade and on my platform, institutional platform, I have to manage risk on a daily basis. I can't get, it's not like a retail platform where you guys say, "Oh, I shorted the euro at 113, a couple of weeks ago and I'm still in the trade and I'm still profitable." For me, every day is a new day. And my investors or slash fund, which I trade for Gelos Capital, as you guys know, at least most of you know, I they don't they don't care if you know if I was up $100,000 in a trade, but if I lost 80 grand of it in one day, they're going to be like, dude, what the hell did you do that for? Like what, why, what, that's a lot of, why are you taking on that kind of risk? So everything that I do is on a day to day basis. So when I tell you what my cost average is, I have to give you a rough estimate. It was around here, but last night we were trading here. Okay. I knew it was a breakdown in the euro. I knew it was a breakout in the dollar index of months of a consolidation. Okay. And I just went aggressively short the euro. And I closed out this morning at 111, 111.32 is where the last piece of my trade was covered. So a little bit higher than where we're currently at. Now, you might ask, well, why did you cover it if it's like the most, if it's such a big breakout, because you're talking about several months of a consolidation in the dollar index. Why cover it now? Well, first of all, if you haven't noticed, the dollar index is at 127% extension. Okay, we are overbought, 4 hour overbought, and divergent on relative strength. Does that mean that the dollar is going to stop rallying? No, it doesn't. Does that mean that there's a risk that it does pull back? Yes, there is. And so for me, being so aggressive, knowing that we have durable goods orders this morning, and by the way, the durable goods orders are coming out in 10 minutes. Let me get rid of that. The durable goods orders are coming out in 10 minutes here. And we had some downward revisions last month. I'm I just wanted to clean off my board going into that data, and I was also short the cable too. So just so you know, I was short the cable. I actually had a pattern in play going on. As you can see, it's not active anymore. So I had an active pattern in play, took the profits there. We are at a 50% retracement in the cable. Now, I do believe that we're going to see this move in the pound take us down to sub 127. Is that going to happen today? I mean, it could. Chances are it's not going to happen today. What I'm looking to do is now I'm looking to take any rally. I'm looking to take any rally and short the pound from here. Now, that doesn't mean we're going to rally. I'm just saying if we get a rally in the cable, that's what I'm looking to do. I am very skeptical about the dollar and about what we're doing or what the dollar is doing because of this. Let me show you this to you. Okay, this is daily sentiment index. Okay, this is where we were at last night. Take a look at this. Zoom this in for you guys a little bit. Highlights are my highlights, and that was just my cursor went too far to the right. Euro 14, Swiss franc 11, Canadian dollar 7, Aussie dollar 13, New Zealand dollar 10, dollar index 91. These are very extreme numbers, especially the Canadian dollar. When you get below 20 or above 80, you have to start paying attention. You start getting down to 10 and lower or 90 and above. Now you have to be really, really careful. And so when you have most dollar pairs, the yen's a little off still, but the peso's off a little bit. But when you have most of these dollar pairs that are really within extreme parameters, the risk of a dollar snapback for the next day or two is kind of high. And so I decided to take the safe road, being in my most aggressive position of the year, or one of my second most aggressive position of the year, heaviest, the biggest position I had. I decided to take it off because I did. To me, there's too much risk at this very second. That doesn't mean that the dollar can't go higher. I ultimately believe the dollar is doing what you see here, and we're going to see the top of this flag. We might actually see the top of the flag today. The dollar index could actually hit 96 or 98.64, which is another 35 cents from where we're currently at in the dollar index before it's all said and done. Hell, we get a strong durable good order, we're going to be seeing that like here in the next 15 minutes. So I'm not opposed to the dollar going higher. I was a little worried about being so aggressively long the dollar. Now, what I could have done is I could have just taken partial off, which I initially did. I could have taken partial off and held on to the rest. But going into the number, I'm like, you know what? I've had a great couple of days. I mean, I made some really good money this week already, and is it Wednesday or is it Thursday? What's today? What is today?
It's
Today's
Thursday.
Thursday.
Yeah.
It's Thursday. Shoot.
Yeah.
Yeah, I've already made really good money this week going into Thursday, and it's like I don't want to be too aggressive and piss it all away on a Thursday going into Friday, which I've done on so many occasions in my career. So for me, like I said, better safe than sorry. So I booked a bunch of profits, which is great. And now I just want to see how the durable goods orders go. I want to see how markets respond from here. I mean, you look at the NASDAQ's at highs again today. And the NASDAQ's extreme. I mean, we're at 91. You saw 91 on the DSI. It gets a little risky up here, and so I think you have to start being a little bit more cautious with everything that you're doing. Anyway, we do have data coming up. I am going to be passing the torch over to my colleagues Steve and Stelios. How you guys doing this morning?
I'm very well. I don't know if Steve is going to be with us today. I'm not sure actually. But I think we have Andre today with us, and
oh, he is. Okay. Let's see if Andre is even here.
Yeah, he is here.
Let me bring him over then.
But I can.
That's great because you guys, getting Andre here. Andre, there he is. Getting Andre here is great. I'm going to make him a panelist so he can be on with you here in a few minutes. Because Andre gives you a different point of view, a harmonic point of view of the market. So that's always nice, to have. And especially if you're like me, I have a very difficult time seeing Garleys are easier for me to see, but then you start getting into some of the very complicated harmonic patterns. Like here's a good example of like the US dollar Norwegian krona that I'm looking at a possible, Garley pattern setting up, which would be right here on a reversal at 874 on the dollar index. If you follow, excuse me.
Hey, Blake.
Yeah.
Is there a tool that you use on TradingView that gives you the harmonic pattern?
Well, it gives me the drawing
I
tool,
see.
which is right here, the XABCD pattern, and so that.
But it doesn't have them all. It doesn't have
no, it doesn't have a template. You when you draw them, you actually have to draw them yourself, and you know what I mean. So, but I know what the equations are. So therefore, when I'm doing when I'm drawing it, I go, oh look, we gotta, here's a butterfly, and then I can look for a reverse. I can go out and do it myself because I know what the calculations are. But there's no like makeshift template where not that I know that you can just kind of grab and put an overlay, but you can't because harmonics are very rarely work like that. And Andre will confirm with you, I'm sure, here in a few minutes. But since the durable goods are coming out, I'll stay with you for the next couple of minutes here. Let's bring over the Bloomberg system so you guys can see Bloomberg when the data comes out. Here's the durable goods. Let me pull this open just a little bit. This is Bloomberg, so if you guys don't know,
you shouldn't drink any a large cola drink with sugar in it when you use a Bloomberg.
Because of
Bloomberg.
His no more big Pepsi drinks or soda drinks in New York City, something like that. I forget what
it turns off automatically if you have one on your desk.
That's great. That's great.
So I'd like to warn you.
So then it's good. It's less diabetics in the world, I think. Preventing. Anyway. Watch these. This is the important number. Durable goods minus transportation is 0.2%. So if this number comes in below expectations, that's bearish for the dollar. If it comes in above expectations with 0.2% or better, it's going to be better for the dollar. Oops, let me grab the dollar index, show you guys really quick what's happening. So
and
again,
the yen action has been crazy. I hope I'm going to ask Andre about it when he's.
Yeah, that was a little nutty overnight. I think it was a squeeze because due to the
we had the BOJ. Yeah.
Well, there's a couple things. For the holiday next week, you were going to get quadruple interest yesterday. So you had
they're off all next week for the new emperor, right?
Good number. Dollar should be good for the dollar. dollar got a little bit of a lift, but not a huge one. I mean, it's a pretty good number, and the dollar's not.
Revisions are a bit negative, but still
Yeah,
good
the
number.
revisions are decent. But look at the euro. So the euro just hit new lows, but I mean,
Even a little tail.
yeah, not like heavy new lows.
Yeah.
I don't know. I don't know if this is like it's like a run out and because the dollar had so much tailwind going into the number. We were so strong going into the number. I don't think you should be chasing the dollar up here. I think the dollar might actually do a little bit of a pullback. But
And the
anyway,
DSI numbers, Blake, they're unbelievable.
they're very extreme, so you got to be a little careful. Anyway, well, Stelios, I'm going to pass it over to you. I guess Steve isn't coming today.
No, but we got Andre, so you can pass it to me. I can talk for a couple of minutes or 5, and
Great.
then yeah.
Oh shoot!
So
What happened?
Good luck. Good luck today, Blake.
Thanks, guys. Hey, yeah, have a great trading session. Thanks everybody for being here, and I'll see you guys
in the room.
Tomorrow. All right,
No,
in the room. Yeah, I'll see the rest of you guys in the room.
Thank you, Blake.
See you guys.
Thank you very much.
Hello,
Okay.
Stelios.
Hey, Coach, how you doing?
Good, buddy. Always great to be able to talk to you without being interrupted by Steve.
Yeah. Good point. Okay, so let me begin just by wrapping up a couple of things from overnight and this morning, and then we'll get Andre to come on. So first of all, yesterday after the webinar, we had the Bank of Canada, which kept rates on hold, but they continued the recent trend of central banks being on the dovish side. And I did say yesterday on the webinar that given positioning, given sentiment, if I had to put a trade on, I would probably be buying the Canadian dollar, but I didn't have a position. I just said if somebody put a gun to my head and asked me to trade it. As it turns out, it's the Canadian still weakened because they were dovish, and they actually said that an accommodative policy interest rate continues to be warranted. And so they have been on a slight hiking bias, and this was a step away from that, and definitely a little bit more dovish than the market expected, and that's why the Canadian weakened a little bit. It didn't weaken substantially. I think it's something like 40 pips on the USD CAD, so nothing massive, but still a little bit more dovish than expected. Now overnight we had the Bank of Japan, and they kept rates unchanged, but they were also dovish. Again, I said before, it's become a pattern now, and with the exception of Norges Bank, which was slightly on the hawkish side, every central bank, given the global environment, they're being cautious, and you can't blame them really. So
Stella, I have a great song suggestion for all the central banks. It's an old Prince tune. Prince, When Doves Cry.
Let's go crazy.
When doves cry, because that's what they all are. They're a bunch of doves. They're crying. They're, trying to hold jawbone things, and trying what was effective, 5 years ago, and trotting it out there again. But also, it's a very good tune.
Yeah, absolutely.
Check it out.
Absolutely.
Check it out. When Doves Cry. I'm gonna, me, I'll tweet it.
I know it very well. Okay, so continuing with the doves, they were dovish, and the notable change to the statement was that they're going to keep rates low through at least spring of 2020, and before that, the guidance was that it was going to stay low for an extended period. So that was that combined with a small downward revision to inflation and growth. That was taken as a dovish sign, which it kind of makes sense.
Do they all use the same dictionary for an extended time? How many times have you heard that from different central bankers? The same phrase.
Yeah, absolutely. What can I say? They want to. I'm
going to go to. Yeah, I'm going to have to go to Central Banker University to, learn what kind of trite phrases you could use, because they're all saying the same thing now, aren't they?
Yeah, absolutely. So that was the BOJ, and then we had another interest rate decision. It's a currency we don't cover at ForexAnalytix, but we do watch it, and that was the Swedish krona. And Riksbank, they kept rates unchanged at -0.25%. And they said that they're going to hold the rate steady longer than previously expected. And they also announced an 18-month QE program starting July. So that was unexpected. So the Swedish krona has been weakening, and with that, the other Nordics have been following. And it's actually it's really interesting because they have a negative rate. They issue debt at negative rates, so they have incentive to issue more and more debt because they get paid. That's nice, huh? Just a thought.
Yeah.
So that was Riksbank. So there's a pattern: 3 central banks, 3 dovish statements, and that's how it seems that it's going to be going until there's a major change globally. Now, another thing I wanted to talk about very briefly. Our friend Norman on the chat room, he said, what do you think about the S&P and stocks in general? And this is something I've talked about in the past. And if you look on a really long time frame, I'm not talking about weeks or months, I'm talking about years, then there is only one direction for stocks, in my opinion, for the major indices like the US stocks and German stocks and Japan and the UK, and that is up. And that's it, because of inflation, because of the way all these countries are producing huge deficits every year. $1 million today is not going to be able to buy the same amount of goods and services 20 years from now. So, in 5, 10, 20 years, that the valuation of companies is going to be higher in dollar terms. So in my opinion, and we've seen this since the 1971 when the US got off the gold standard. It's just going parabolically higher. Now the question is, there are going to be pullbacks. That's natural. So my long-term view and the view I have when trading my own family portfolio is I want to be long indices, but I want to be buying dips. So and I mean meaningful dips, not a 5% dip or a 10% dip that we had a few months ago. So my view for stocks is in the long term, they're going up, end of story. Not individual stocks, because obviously individual stocks, you might have something in their business model or the way they run, and they might do really, really well or really, really badly. But for indices, that's my view. And, I don't see how this can change unless governments start creating surpluses and they don't have such high inflation in terms of, not product inflation, in terms of money and debt creation. So that's just to answer Norman's question about stocks. And what else? Now that's pretty much it, actually. I think for now, again, it's been a pretty quiet day apart from the central banks. So let's have a look. Let me see if Andre is here. Oh, here he is. Okay, so let's see. Is he saying something? Oh, yes. Okay, so Andre, I'm going to give you the screen. Sharing. Change presenter. Andre Cardoso. I'm passing you the screen. If you unmute yourself, I think we should be okay. Andre, are you there? He is here, but we cannot hear him. Hold on a second. What is he saying? Muted by the organizer. Let me unmute him.
Okay.
Please unmute. There we go.
Give Andre freedom of speech.
Hello, everyone.
Okay.
Good afternoon.
Hello, Andre.
Andre.
Hello, Steve. Dale, how are you?
Okay, my trading warrior brother, you?
Are we fine with my audio?
Yes. Are you wearing a beret today?
No.
Okay.
Raspberry beret. Hey, another person.
Let
You
me,
wear one, right? Still? Beret every once in a while?
Always.
I know. Oh. All right. Well, I have my tinfoil hat on, Andre, so I'm ready for you.
Okay. Thank you again for the opportunity to be here, and I can't disagree. Actually, I need to agree with Stelios' last comments about the stock markets. there's one thing that I learned when I started to study the market, and investors buy stocks and traders goes into the forex market to trade on a daily basis as a day trader or a swing trader, whatever. We go into the forex market to trade, but most of the times investors goes after a stock to buy the stock. We don't short the stocks. We search for buy opportunities when we try to trade or to invest in a stock. And I can't disagree, or actually I need to agree with last comments about S&P and about the equities in general, about Stelios' last comments. So I need to show you a few charts here. One of them is my last daily or higher time frame charts on S&P. So this chart was published on January 9, and I remember perfectly being here on the webinar discussing this chart. And I want to go again into this chart on S&P because we are approaching, first of all, we are approaching the previous higher high. So eventually the market will break these highs to print new highs. And let me try to show you the pattern that I was trying to project at that time. So it was too soon, as I said at that time, it is too soon to project that pattern above. Only if the market starts to break above these highs, I will start to think the probability for that pattern to develop later. And obviously we need to violate the previous higher high. We have, as mentioned by Stelios, we have NASDAQ already trading above these highs. And the pattern or the swing or the natural swing, and I remember saying, if this is a 15 minutes time frame chart, I have no doubts. I have not no doubt, but I can increase the probabilities for that to happen. If this was a 15 minutes time frame at that time, and based on the most recent conditions at that time again, I have no problems to say that eventually the market will trade the 1618 extension. Actually, the market will trade the 200% extension from this previous swing. So I still believe if the market breaks these highs, I believe the market will trade those levels, eventually the 200% extension. So from this last swing that prints this low, divergent with the previous one, we have this, we have the RSI printing kind of double bottom between those lows, clear bullish divergence. I remember to mention that divergence and at that time. And we have also completion point for a pattern here. So this was what I call a perfect scenario to bias, in this case, S&P, obviously, and eventually some equities. So the market has completed the shark pattern at 224 extension. Actually, this is wrong. The market has completed the crab pattern at 1618 extension. It's this swing over here. The market has traded the 1618 extension. A few points below it has been pushed to the 224 extension. And as soon as the market starts to recover with this white candle, I started to, to imagine the possibility for the market to rally and to form one not conventional or not common eventual shark pattern above 200%. What I'm doing here, I need some triangles there just to show you the pattern. So this is what I'm expecting for S&P. As mentioned before, 3,300. So this is my level. And well, I need a new higher high above these previous highs, at least. And this was my 2 cents related to S&P. Until there, I don't think too much what will happen there. Then we have also a few charts on oil. This was also published November 26th, last November. the market was trading at the 50s at this point. And this was one of the sharks that I shared among Forex community, and the eventual development of these inverted heads and shoulders, which will put the price trading at 61. So if you follow ForexAnalytix, we were trading at the 61, and we are now trading above these levels. So at this point, I go into a lower time frame. And if you go a few moments ago, Dale was checking with the 1 hour time frame chart, and we have what I call what we can face as we can call it bearish hidden divergence between those two tops. That can force the price to pull back a little bit. Eventually, we are now trading a new top.
Andre?
Yes.
I'd like your definition. I had Vladimir Rybakov on yesterday, and he talked about hidden divergence. I'm hearing more and more about it. Can you just give a quick tutorial on the difference between hidden divergence and regular divergences, which I do?
Yes, of course. Well, when we search for, I have a chart. Let me try to
like
share
this example right here. Why is this hidden divergence?
Well, it's hidden divergence because the last push above retesting the previous highs is now above on RSI above the previous one. So
because it took it out, it took it out.
It's starting to pull back now. Obviously the market can retest only the previous lows and then start to pull back, and eventually the pattern that the price will develop will force that or will reinforce that idea. But bearish hidden divergence, at least we avoid to buy the market at this point. So if somehow you are trying to buy the market at this point, we should avoid to do that with this hidden divergence here. And I see no reason to buy this market at this point unless you have extreme long-term view for oil. We can see, you were saying that there are people projecting oil about 100. It's possible. At this point, I see no reason to think about that possibility. At least there are no fib ratios that are showing me that possibility in a mid-term and neither in a long-term approach. We are now entering again overbought territory on a weekly time frame. So I believe this is not the best place, in my opinion, to try to buy these markets. Eventually, the market will enter into a sideways process, in a small consolidation process around these levels.
All right, a question for you from Leopold. Does Andre think oil can pull back to 55 before heading higher again?
It can happen. Let me try to show you my last approach on oil. And for those who are following us and subscribing for ForexAnalytix, it will be easier than others for sure. I was expecting, so we are trading the 200 moving average. We are trading a few points above the 200 moving average. 1618 extension, golden Fibonacci extension retracement level. So the 618 extension, the 618 retracement, and the 1618 extension. We are now threatening these levels. Previous structure support is now resistance. There, in my opinion, I need to see a pullback. I'm never sure if I have no harmonic pattern there showing me a specific target. I can't say, well, I think the market will trade the 57 or the 55 or the 52. I don't have targets there. I don't have a bearish pattern here that shows me that possibility. As I said, I need to wait for the market to develop. I need to wait for the market to enter into a sideways process. Eventually, the market will start to show us something. One of the possibilities is one heads and shoulders. If this is our top, this will be our left shoulder, and this will be our neck positioned above the previous structure resistance. So I need to eventually to zoom this a little bit. So, but if this is our top, this will be our left shoulder. Obviously, this is pure speculation. We don't know what the market will print. But one of the possibilities is this one. The market will reject, will trade, will retest this kind of pivot between previous structure resistance and support level. From here, it's expected
Put in a right shoulder.
Printing a right shoulder, it's a possibility, and then a fall from here.
What would it measure that formation? A breakdown, if it evolves
a breakdown from it's in this case, and I like to project.
Yeah.
I like to project based on the support after reinforcing this support level. You know, so we have this bottom. I need to wait for the market to reinforce the next zone.
Yeah.
Because the market eventually can reinforce this next zone just a few points above, not an horizontal neck. And I will measure not this bottom, but I will measure this bottom if the market creates a support a few points above. So imagine a situation like this. I need to wait, obviously, but I need to. I will project below this next support level. I will project
like
a pattern. And as you see,
about
60
$59.
bucks. 60 bucks, 69. It's a possibility. From here, we can start to use our Fibonacci retracement tools. We can try to search for confluence between fibs and between price structure in this case. If this acts as a false breakdown above this previous structure resistance, so let's say if the market actually fails to break above, we can use an extension from this last swing and project and try to search for the 161.80 and the 224 extension. This will print a minor or a lower degree shark pattern, which tends to search for the 161.8 extension for the completion point, or eventually the 224 extension, if that happens. But for now, for it to start to manage to project this pattern, we need to wipe first this previous structure support level. This minor support needs to be broken first in order to start to project those patterns below. 12 hours time frame, we have some time to deal with it, with that possibility. Then we have also, and because the dollar is rallying, I publish also this Dixie chart on ForexAnalytix. Let me try to show you both of the sequences that I was expecting and what the market ended up printing. On my first weekly, actually it's not this one, it's the previous one. At this point, this was a chart from December, last December, the beginning of the month. And at this point, we were facing the weekly resistance and a daily resistance printed here, fractals, approaching the golden fib. And I was expecting the market eventually to push back. And if the market pushbacks into these levels, I was expecting for this bullish shark pattern. So the market has completely ignored that possibility. Then in the meanwhile, the market has printed this Gartley pattern at 127 extension. But then the market has started to pull back into the 200 moving average. And I was, at that point, I was expecting the formation of these eventual heads and shoulders, which will put the price below this monthly support. So we are now trading above this level, obviously. And then we have this chart that suddenly the market has started. So the market has bounced from this 168 extension. We keep on a higher time frame. This is a weekly time frame. I published this. I don't know if people remember this crab pattern below the 168 extension. We published this chart. Actually, I have that chart also published on TradingView for those who are more interested on those trades, on those harmonics, in those patterns, specifically the 2618 trade setup, which guide dollar into the recent prices, so the market keeps trading higher. But from here we have this bullish crab pattern at 161.8 extension, and then we have the bullish 26.18 trade setup. It's a double bottom followed by the 618 retracement, and the market has bounced from here. So it's exactly where we are now. So this was the 161.8 extension, the crab pattern. The 26.18 was formed below, and then the market started to rally and formed this flat top formation, develop into this flat top formation, which tends to break above usually. So at this point, I published this chart recently, last 15 April, expecting, well, there are only two options for the market to go down or to go up, obviously, but those patterns tends to break above the flat top, and the market is already trading above those levels. So we are now, and based on the most recent swings and Fibonacci criteria, we are now facing or approaching this 99.40. Let's change into this Dixie chart. We are now approaching, as mentioned by Blake, we are now trading the 141 extension from this last swing and approaching the 127 extension from this last swing, from this bottom monthly support to the most recent resistance. And we are now approaching the 127 extension and the 161.8 extension also for a potential crab pattern extended at 161.8 extension. So this is what we call a dip crab pattern at 161.8 extension. So it will be printed if it will be printed at 98.92. Just a few points above at 99.14. So we have this, where is that chart? We have this, we have the 161.8 extension and previous structure resistance and support level, which may put some pressure, 99.40. And if the market decides to completely ignore that level, I will think a retest of the previous structure highs, the higher highs at 103.71. This is a 224 extension. So if the market fails the 161, eventually it will trade even higher, obviously, and will retest these highs. And if the market prints that pattern, usually it will push, it will print a pullback. Eventually, we need to pay attention for the market conditions once the price starts to approach those levels. At this point, we are, as mentioned by Blake, we are now trading these Fibonacci extension levels right above previous structure highs. And this is what it is. We need to wait. If you are not participating at this point, I see no reason to start to think about it. At least at this point, we have
okay,
also.
Andre?
Yes, Dale?
What is the highest objective based upon your work you could come up with? I mean, some bulls are talking 102. Some are I'm talking about the super. What's the most bullish potential target for the dollar that you could come up with?
That's the chart that I show you here. This is a weekly time frame chart. I have no.
Okay. 103.71.
103.71. It's my extreme target. Retesting the higher highs. It's curious because the 224 extension is exactly nailing the previous structure highs.
Okay.
And so, well, we have also the 161.8 extension nailing the previous structure support level, which may put some pressure there.
99-ish, yeah.
99-ish. 40, yeah.
Okay, yeah, I like that number too. Okay,
yeah. But
I just think if it gets to the previous high, it'll take it out.
No, eventually we are forming this eventual megaphone formation.
Yeah, okay. I was wondering if you were going to call it a megaphone.
And those will trade in the direction of the previous trend. They'll imagine what this means. So if we project this swing above this structure, that's kind of
gets you up there.
Move. Yeah. But let's see.
A day at a time.
Yeah, a day at a time, step by step.
I just like projecting into the future because I'm trying to forget my past.
don't try it because your past.
Oh, I learned
precious.
from my past.
Yeah, but it's precious.
But
very
it's
precious.
too long. My past
Of course
is very
it is,
long.
and I hope it continues to be long for many years, my friend.
Thank you, buddy. Thank you for stepping in for Steve. Great looks, Andre. Here's another reason to be a subscriber. Andre comes on maybe once a week, but every day you're going to be able to look at these, very esoteric type formations, which it's not just harmonics with Andre. If you've noticed, he uses other tools in conjunction with his harmonics, fibs,
Yeah, that's no other way.
formation.
Yeah.
Yeah, you're a specialist, but you don't ignore the other parts of technical medicine to come up with a diagnosis.
It makes parts. Yeah, it makes part of the process,
Yeah.
and it's interesting when we have multiple conferences between not only between our own different approaches, but between our different experts inside ForexAnalytix when we are all synced. It's a powerful signal. And let me finish with this dollar versus yen. Also published before the development of this megaphone formation. Also, we have these lines there already for those who are following ForexAnalytix, and this is kind of an invitation for those who aren't. Join us. Share with you some of your live experience on our chat room. I will promise that I will be there at least more frequently, no doubt. This is the 4 hours time frame chart that I published recently, last 22 April, expecting this eventual megaphone formation with the support below. And we are now, we have already reinforced that structure above, wiping out all these resistance levels weekly.
Yeah,
and
took out every buy stop.
And then it has started to fall, and it gives sequence to my idea, at least. So I will not be surprised to see let's say, not in a long term, not in a mid term, but in a 4 hours time frame chart, I will not be surprised to see yen trading lower from here. And that finishes my presentation for today, Dale. All the best.
Well, okay, much respect, Andre. Thank you very much.
We have an interview today.
Yes, we do.
Okay.
So Matt, Panama Orange is here. Much respect, Andre. Thank you for edifying face today.
All the best.
Okay. All right, buddy. Okay, Panama, I'm making you the presenter. Looking forward to having a conversation with you, inform some people what they need to do in this type of environment, which I think is confusing to people unless they're just bullish stocks. And, commodities have been getting killed, grains have been getting killed, and just waiting for you to, let's see if I have to unmute you, Matt. You're self-muted, Matt. So you have to, there's a drop-down menu. You've been here before to use your audio. Do you see it? Okay, something. You're sharing your screen. I'm muted by me. Okay, let's see. No, it says, oh, okay. You're self-muted.
Okay.
There you are.
Right.
Yeah, Matt. How are you, my trading warrior brother? I'm not. The only thing I'm seeing is you're sharing your screen, and it looks like your desktop.
That's just my phone. I'm using my S9.
Oh, okay. You're so advanced.
Yeah.
I can do it. I have a hard time using iPhones. After I got sick about 5 years ago, I gave up a cell phone and used a landline, and I'm like an 2-year-old with an iPhone. So, I really appreciate, since I've had you on before, Panama, you're always, sending me DMs with your thoughts and certain things that you believe in and your philosophy. So, I want to start off with your philosophy about people stacking precious metals during this time frame, and what's your rationale for doing it?
Well, I became a stacker in 2015. That's really Jim Rickards kind of helped convert me on that. And also I'd seen, it was a big bubble that ran from 2011, crashed really violently. And it seemed like a good thing to try and knife catch. I mean, recently,
All
when,
right. Did you bring
Litecoin,
any charts? Otherwise, I'll show my screen. Did you bring any?
I just got the notification last night to come on. I don't really have charts ready, so
Okay,
you
because
might want to just,
I've seen some nice charts from you before. Okay, I'm showing mine. I'm going to show mine then. Okay, while we're talking about gold and silver, you'll still be able.
if you
You'll
go to
still
my
be
Twitter,
able. No,
if you go to my
no,
Twitter feed,
yeah,
I have a chart at the top,
it's
one of
okay.
my top tweets. Yeah.
Okay, I'm going to show my screen. All right, so crude breaking down for me. Nice. Okay, you see, you're my lucky charm, man. So, okay, so in 2015, that was after the 2011 peak of what, $50 silver, $1,900 gold. Where was gold and silver in 2015 when you began to stack it?
Well, it was really around summer of 2015 that really got. I mean, it pretty close to. I didn't get the exact low. No one ever gets the exact low in anything, but I got pretty close on gold. Um, under 1100 is when I really started to heavily invest in that. And just to give a quick summary of what led me to even get to that point before that,
Let's go
I
back
talked about this
to,
before.
you're going to
Yeah,
go back to Katrina here?
I'll make it very quick summary. Yeah,
Oh, go ahead.
I was on the police in Katrina in New Orleans during the hurricane, and I was in downtown New Orleans after that, and it was quite a mess as far as organization and the collapse of structure. and yeah, to this day, I still value running water quite a bit. Or I don't take it for granted whenever I have clean running water. Which is funny because you think we're being on a river and you just walk up to the river. No, you can't just
Yeah.
do that. But so it did give me kind of a skeptical view of power structures.
The
And
fragility of them,
the
that
fragility.
everyone thinks that, FEMA is going to rescue them. But, we've seen example after example since Katrina. So, probably what you experienced, and it kind of led to a paradigm shift for you. You could probably say there are millions with some of the natural disasters that have happened in our country, let alone the world, that start to appreciate everything that we take for granted. So, okay, so you lost confidence in government during
Well,
that experience, correct?
yeah, I mean the traditional systems, safety checks that are supposed to be in place that don't really exist, even though you think they do. And we're all aware of the fractional banking reserve system and how your local bank only has a tiny amount of money if a lot of people went to go hit the ATM or try to do a bank run or withdrawal. So
Yeah,
I don't.
Rickards talked about the ATMs going dry. I remember that. You think that's
Yeah,
going to happen?
I I think it's possible. I mean, there's all sorts of natural disasters and terror attacks, all sorts of things that could trigger that kind of run. I don't, but I really don't think it's necessary for metals to move higher here. I mean, in 2011, it took like a 7-8% drop in a dollar. It wasn't a big drop, and during that time period, silver doubled. Well, the dollar only dropped like less than 8%. So you don't need hyperinflation for silver to just go crazy from these prices because it's been so cheap for so long, and it's been suppressing. Mining production is dropping rapidly. It's like down 20% last year, as it should be. You can't profitably really mine at these prices. I know you guys do a lot of technical analysis here. I do technical analysis as well, but in the commodity markets, I'm sure you're aware of this, commodities are much more news and fundamental sensitive. And you've seen like this in oil. Oil, you'll see this great chart setup but then some news comes out of Saudi Arabia or somebody says something and suddenly it's up or down 10% in like 5 seconds. It's like
Okay.
commodity
You know,
markets.
I want to get even more down to the gut level with metals here, and you know, price projection, what they say about opinions. You know, everyone
Mhm.
has one. What I'd like to know is from you. And I bought some silver, and it's not. It's, you know, if you're stacking it, it's heavy, it's cumbersome. Um, where do you store it, Matt? I mean,
Well,
what's the right way to secure it? If you
that, that,
threw 20K at physical silver, what do you do with it?
well, that is why people who are just getting into stacking, you should stick with bars, 100-ounce bars. You can get them for 59 cents over spot at
Okay,
AppMax.
what do you do with the bars?
Well, they're really not. You know, even if you get a little tarnish on them, cleaning it off is not as hard as, say, if it's a coin. Like, let's say you had 500 coins in a bucket somewhere hidden, and they all get tarnished. Now you got to clean 500 coins. Well, cleaning a 100-ounce bar, it'll take you, 2 minutes or less. And even then, a lot of people who haven't stored or own silver, yeah, that's a risk as far as storage of but it's not like rust. It's not just going to eat away all the way through it. If you throw like a silver coin or 100-ounce bar in a salt water in the ocean, leave it there for 100 years and come back, and then clean the tarnish off and then weigh it on a scale, it wouldn't have lost even 1% of its mass. Whereas, like, you throw certain types of metal in the ocean, they're going to rot all the way through. And so
Right.
it's storing silver is it's not difficult. It doesn't take the heaviness is actually, I think that's a benefit, because if you get hit by a flood, if your house gets hit by a plane, if it collapses, there's an earthquake, it's not going to move that
How
far.
about a robbery?
Well, that's the thing. Jumping a fence with heavy silver, some robber jumping out your window, running, they're not going to be able to
You
run.
know, that's a
So
good point.
yeah, it's harder to
You
run.
you, you make it inconvenient for a thief, unless they're taking steroids and benching 4.25 for them to run away with a lot of silver. Whereas if
And
you had if you had 10 gold coins, that's, you know, grandma could put them in her purse.
right, and that's one of the things about gold and silver is their durability versus storing money in, fine wine or art or collectible cars. Those things are all very fragile, very easily damaged. And gold is basically immortal. Gold, you could store gold in your oven and it wouldn't be damaged. You can't damage gold at all, no matter what you do. It's like um that's why, people ask, well, what good is it? It's durable and extremely rare. And that's, two things. They say that about diamonds, but now they're making diamonds in the lab. They're making diamonds in labs that are
Yeah.
nearly indistinguishable, because it's just, carbon and heat. It just really, compressed hot carbon. Um, so there's really nothing to compare as far as rarity and durability. There's things
You
that
know,
are
man,
rare.
I
Go ahead.
I read a story about a guy who, you know, knew he was, you know, had a terminal disease, knew he's going to die, didn't want to leave a cent to his kids, so he liquidated all his real estate and his bonds and everything. And he had a vision of an angel, and he asked the angel if he could bring one suitcase with him up there. And the angel said, no, you can't bring anything. But the angel got an exception from St. Peter at the gate. So the guy converted everything into gold bars, all right, 100-ounce gold bars, put them in his suitcase. When he passed, he got to the gate, and St. Peter said, you know, you can't bring this in here. You can't. He said, well, the angel said that you would let me bring one suitcase. He goes, oh, yeah, I remember. And St. Peter goes, let me take a look at what you have in there. So the guy opens the suitcase, and St. Peter says, why did you bring pavement?
Hmm.
You
I've
get
not
that?
heard that one. I get
Because
it,
the
but
streets are made anyway, it's a joke. So
I
anyway, all right. So you're not afraid of you know, storing it, and you know, a lot of people are. And what do you say to people that want to store things and say a safety deposit box at a bank? It's possible that if there is a banking problem, you're not going to be able to get to your box, are you?
Well, most safety deposit boxes are totally manual. You have a key and the vault attendant has a key. So, even if the computer systems are down, there should be a window of like a day or a few hours where you can get there and still get your stuff out. I mean, for the government to go into your safety deposit boxes, that means things have gone really, really, really bad. And that is unlikely.
Yeah.
So
Well, like,
it's not a bad
yeah,
option because
that would be the 30s. The 30s.
yeah, it's not a bad option keeping stuff in the safety deposit box because even for various government agencies to get into your box, it's not easy. They really have to get like a serious court order. They got to go in there. They got to drill through the lock. They don't just have, a little button they hit where it just pops open and they can just go peek or look or take it any time. So if for some reason, you live in a really small apartment or that is a good that in you're within walking distance of the bank, because you can
Yeah.
get there before the stampede, when you see an emergency starting, it's not a bad option really for gold.
Okay.
Now, as far as like what coins, I was saying, well, silver, you just go buy generic, buy bars. Well, with coins, like for example, SD Bullion right now, they got a sale on Maple Leaf pure gold coins, $19 over spot. I think it ends today, but usually it's only 25 or between 20 and $25 over spot. And that's, you can get kangaroos for that too. You can get Philharmonics, and those are great coins. You don't have to buy antiquated coins. You don't have to buy the graded coins. You don't have to buy. You don't even have to buy eagles. Eagles tend to be a little more expensive.
Because
But
they're supposedly going to be legal tender and can't be confiscated, correct? Is that
I
why
don't
people
believe
pay a premium?
I don't believe confiscation is ever going to happen again. Even people make the point that during the last confiscation, very few people complied, and no one really checked. It was one of those laws where
I like those kind of laws.
it's what you can imagine enforcing that in America nowadays, asking people, "Hey, turn in your jewelry." People are just it wouldn't work. I don't believe there's ever going to be confiscation again. They will
Okay.
drive up. Now, in an emergency, the price will, if it hits 5,000, 10,000, well, people will just be selling, running in like they were in 1980 and just selling it. So it'll be hard to find just from people trying to liquidate it to get cash from the price it's going to. I mean, I don't believe hyperinflation's coming. I believe a replay of Japan is coming. And that's also why, and I've made this point, I did some tweets yesterday, that, a lot of people are thinking the market, it'll crash here or it's just going to go straight up. Well, the third option is we start chopping sideways. But as we chop sideways, and I know you guys are doing analysis before this and how the dollar can go a little higher. Well, I think not only do you have Trump, screaming for QE, you have Bloomberg coming out yesterday. You have mainstream publications saying, hey, inflation is so low, we should do QE right now. Inflation's just too low. We need to do it. It's insane with, asset prices where they are. But I can tell you why the Fed is starting to do this and why they're starting to get dovish. And it's very simple. And that is they and their friends who live in upstate New York, the real estate bubble there is popping. High-end real estate in New York is in some areas down 20, 25%. It's down big. And a lot of that is just because, QE has enriched people who are already rich, but it's not creating new rich people. So this is why the real estate, if you look at the median home price, and this data came out a few days ago, median home price since Donald Trump got inaugurated, it's gone nowhere. There's been no gain in median home price, which if this was a booming economy, that median home price should be up 20%, 30%. It's not going up.
Like
Because
into 07, like they behaved into 07, they're not behaving that way on this recovery in real estate. Is that what you're saying?
Because too much of the money is concentrated in hands
Yeah.
basically in baby boomer hands. It's again replay of Japan where the QE there enriched the much older generations. But you see the younger people there, they're not getting married, they're very broke, they're working 12 hours a day, just like kids here or young people driving for Uber.
How about old people?
There's also there's middle class and lower class old people who just did
not every boomer, a lot of boomers are falling to the wayside here too. They're not all set up. In fact, a lot of them are renting the house they lost that's now owned by a hedge fund.
Right, and the other sort of red flag is the retail apocalypse, which we're seeing, and you're seeing that phrase everywhere. It started,
Yeah.
as a trickle 6 months ago, retail apocalypse, and now mainstream, it's like 75,000 stores are going to close.
When's the recession/depression start?
I think it already. If you look at housing, house prices, and you look at retail, it started already, and people are just coming up with like this excuse that the retail weakness is just everyone going to Amazon. It's garbage because casual and sit-down restaurants, with a few exceptions like Chipotle, but if you look like Red Robin, or you look at places,
People don't have disposable to go to restaurants.
the young people are not going to sit-down restaurants. That's
Okay.
and they're not buying cars, and they're not buying houses, and it's just
Well,
a
because they're burdened with student debt.
that's a burden with the student debt, right? And I think the Fed made a really big mistake with this V bottom from December with all the dovish QE talk, because the next time the market rolls over, they're going to have to back it up with action. They can't just jawbone. If the market goes down 7-8% next month and a month after, and the Fed comes out and says, "Oh, hey, we're dovish," everyone's going to go, "We know. We already know that." You have to back. You can't just keep saying we're dovish. You have to actually do something, and they will have to actually do something. And then you get the scenario of the market goes sideways for 1 or 2 years, but the dollar dropped 30-40%, and
All
that's
right,
not
so that's the real linchpin because the dollar still looks great, and I know guys that are very good that still have higher numbers. So the linchpin, but there, dollar could go up, and we've seen it over the last 6 months. Dollar could be stable to up, and gold could rally. It did. So why don't we shift gears a little bit, because I understand your philosophy, but when the Fed has to back it up is when we're going to have a more dramatic and persistent move up in precious metals. Am I reading you right?
Yeah, and there's this perception that, well, if the market just keeps going up, it'll turn the Fed hawkish again. But the real estate market is so weak right now in terms of prices that I think they're getting impatient, because we all know the Fed, they really make decisions based on the value of their mansions and their friends' mansions. And if you look at the higher end areas in New York, that's a nightmare. So all they're thinking is, if my house is going down in value, well, we're going to do QE, and now it's your problem. And that's how it's been. People expect the Fed to do the noble or the moral thing, but they literally have a button on their desk that can make them and their friends richer anytime. And you
Yeah,
expect
Jekyll Island.
Yeah, well, we know every time they do QE that people who already have assets get richer,
Yeah.
and people who don't. And we've seen this over and over played out in multiple countries. And here, it's funny, Trump is pushing for QE so hard, but he got elected because of QE's failure. Because QE increased the gap between the rich and the poor, increased the populist surge. That's how he got elected. But now he's like, we need to do more QE. Well, now you're just
Yeah.
making the
Because he
middle
wants
class.
to be reelected. Yeah, because he owns it now. And he's also attached himself to the success of his presidency being attached to the level of the Dow and the S&P.
And
So,
it's remarkable if you look at this in the last 2 days, like 2 new polls are out that show his approval numbers are down like 5%. Now he just got vindicated by the Mueller report. Dow is at or S&P at all-time highs, but his approval rating is dropping. I mean, this is as good as it gets. If those two things can't send his approval rating up to 67.
which I'd also like to mention that you DM'd me when there wasn't a deal with China. You said, Trump is staying tough with China. I think he's going to be exonerated by the Mueller report. Great call. And, you made another call that was several months ago, and now we're almost in May. And I want an update, so I'm going to switch to Geo. You were talking about that you thought there would either be a hot war in Venezuela that we're involved with, and before that's before the Russians got there and the Chinese got there, Panama, or there'd be a war with Iran, which we just put on the new sanctions. People can't buy oil from them. We're targeting Hezbollah. Which one seems more likely to you, or is it even possible we get involved in both areas?
Well, at the time, I tweeted three things. One of three things that's going to happen: the Venezuela or Iran or some kind of
Riot.
Trump. Well, not but something. Since Trump got elected, he's been pounding the table on how we need to do something about Chicago. We need to send feds in, send troops in. He's going to do something where he overrides local law enforcement in big blue cities. He sends in the National Guard, the Army, God knows what.
Well, he was going to send all the immigrants to blue districts on buses.
Exactly. Yeah.
Okay.
So my prediction on that wasn't exactly, but it was pretty close to that in terms of where he's like, there's sort of this soft civil war where he's at war with blue cities, and he's going to just come up with these ideas. Well, he's doing at the border. I mean, you see, he's sending troops to the border. He wants to bus immigrants and just drop them off in blue cities he doesn't like. If he doesn't like your particular city or you're voting against him, he's going to send a bus of immigrants and just open the door. And that isn't the same as necessarily as tanks in the streets, but it is the same mentality, or it is sort of and it could escalate to that point where he just keeps coming up with these ideas, these authoritarian fantasies of things he's going to do to fix everything. And I also think this is why it's so hard to find. People keep the people looking for the collusion evidence with Russia. The problem is he identifies with the way Putin does things in an authoritarian way so much that Putin never needed to pay him $1. Putin doesn't need to send him a penny. He'll imitate Putin for free. He likes that way of governing. That's so you're not going to find that the check.
All right. Okay. So anyway, we're not supposed to get real political here on the show because there are people that support him, and what I'm interested in is I'm a little nervous about Russia and China being in Venezuela and us being on the other side. And let's face it, that Venezuela, I believe, has larger reserves than Saudi Arabia. So I'm wondering, do you think something's going to happen there this summer?
I think the biggest risk area is inside the United States right now because of these stunts he keeps pulling with sending what he's going to send to different cities and these sending troops here, sending troops there, overriding local law enforcement. That to me, because Venezuela, you got Iran, or Russia, you got China. So you have a Syria type situation in Venezuela where we want to overthrow it, but there's other countries already there helping out other. So it's very hard to actually accomplish that. So I think the biggest risk is actually inside the United States. I don't think it's going to be like a full-blown, red versus blue state civil war. It's more of a, a few major cities versus Trump is the major, a few big blue cities.
So civil unrest and reactions in a long, hot summer in America is what you're thinking.
No one makes a mistake. Somebody overrides local law enforcement, or there's some disagreement between the where local powers don't want to let these forces in. It's not like a deliberate thing. It's more of the Revolutionary War was started by like a snowball fight. Remember they were throwing snowballs at those British soldiers and they shot back. And it's things like that. And accidental. I think the biggest risk is inside the U.S. But just to squeeze in one more thing, you remember the last time we talked, I said even when Litecoin was down at near 30, that it's going back to 100 at least. It might not ever go.
You did make that call.
And Litecoin did get all the way back to 100, which actually the move to 100 was so crazy, and the move in Bitcoin was so